It is the age of IT and digital banking, and BOK is also very seriously working on that. Similarly, expansion of branch and digital footprint. So we are working on both sides, as I gave you the snapshot of how we have grown over the periods in terms of branch expansion. But at the same time, we're also putting effort to improve our digital footprint. Non-markup income is another focus area on which we want to work, and we are working. And it has already started yielding results, and inshallah, going forward, it will also help the bank. And last but not least, the corporate governance, focus on ESG and community relation and employee welfare is another area which is important to us. Now, I will give you a brief snapshot of the financial results for 2025 versus 2024. Starting off from the top line, net interest income grew by 15%, which translates into rupee number of 2.5 billion. Non-markup income grew by 132%, and in this 4.125 billion was the total number. Important to highlight is that apart from increase in the fee and commission, there was a gain on securities. As you all know, that there was an interest rate movement during the year, which gave a bank an opportunity, and bank capitalized on that opportunity and earned 2.3 billion gain on securities. So that's important to highlight here. Next one is basically the non-markup expenses. Overall, there was an increase of 11%. This not only includes the impact of inflationary adjustment, but also reflects the investment which is being done by the bank in human resource, in operations, in its capacity building. So this is, but you will see that it's still within the range. Next major positive which happened during the year was the net reversals which bank achieved. As compared to last year, 426 million, we this year achieved reversals of 881 million. And as you will also see in the coming slide, there was also a reduction in the NPL number. So there is a strong focus on this area, and alhamdulillah, it is contributing to the performance of the bank as well. So after tax, our profitability was 5.8 billion as against 3.6 billion last year, translating into a growth of 61% and EPS of 5.02%. This is a historical key financial metrics for P&L. So you can see that in almost all the areas, there is a good, healthy, cumulative growth happening. When we talk about profit after taxation, there is a growth of 133.8%. Next is the snapshot of the balance sheet, the financial position. I'll touch upon the key numbers. Investments, I've already mentioned that although there was a decline in the closing number, but on an average, it has shown the growth versus 2024, and it stood at 274.9 billion. Next big number is basically the amount of 126 billion, which is the advances number. Overall total assets, if you look at it, is 453.3 billion. Next is the deposit number. Deposit grew by 36% from 277.6 billion. The deposits closed at 378 billion. So there is a good, healthy increase of 36%. Net assets were at 23.6 billion, which shows an increase of 1.7 billion, 8% overall. Next is the overall snapshot of the balance sheet numbers. And if you look at the total assets, CAGR from 2022 number is 9.5%. Liabilities is 9.4%. Net assets grew by 13%. So this is the overall snapshot of the key financial metrics in terms of last 3 years CAGR. This is another KPI. CAGR deposits is 15%. Government and private breakup we have given. So we have grown on both sides. In government is 15.4% CAGR. Private side is 14.4%. Advances have also shown a little bit increase, 0.9%. Investments have shown a 16.6% CAGR. If we look at the net assets, it's 13%. Profit before capital gain, provision and taxes is 71%. If you look at the after-tax number, it's in cumulative 133.8% CAGR. These are some of the key performance indicators. As you will see, return on net assets as compared to the previous years has shown a good, healthy jump, 25.5%. In 2022, it was just 2.8. Return on assets, it was 0.1 in 2022. Now it is 1.2. ADR is moving up and down, but it is standing at 36.7 as of 2025 December. CAR has shown strength and improvement. In 2022, we were 14.9. In December, we were 20.1. Infection ratio has come to 9%. It depends also on the advances number, but if you look at the gross NPL number, it has shown a reduction during the year. Net infection is 0.5% as of December 2025. Current account is also hovering around 23, 22, and standing at 24.5 in 2025. Private to government deposit is 57.4 and 42.6. Expense ratio, as you can see, because 2025 was a good year in terms of the revenue, so expense ratio has also come down to 50.7. In 2022, it stood at 78.6. So we have a comfortable CAR position. We have got comfortable LCR position. So this is what we wanted to highlight here. Overall segment performance, I'll give you a snapshot in 2024. As you have seen that we have earned good, healthy gain on securities of 2.3 billion. Forex income was 12% higher than 2024. Plus, we have also reprofiled our investment portfolio, and it is basically happening in line with the overall decision of conversion into an Islamic bank. So IBG portfolio grew by 40%, while conventional banking reduced by 22%. For corporate investment, I want to highlight that lots of new to bank private clients have been onboarded, and that is going to definitely help the bank in future as well, because deepening of relationship is very important for the bank. Retail banking, as I mentioned, 36% growth in deposits, and in current account, there was a 28.7% growth in current account versus 2024. Last but not the least, some of the important highlights. S&P Global recognized our returns in terms of the share prices. It has shown a tremendous increase in the share price in 2025. So that was also recognized by S&P Global. We are continuously working on empowerment initiatives, and in this, we also got this special award and trophy from Peshawar region for the highest women financing bank trophy. And as I mentioned earlier, that rating was upgraded from A+ to AA-. Business risk, that's another thing. Just to give you a recap, as you all know, that credit risk, market risk, operational risk, liquidity, and environmental and climate risk, these are some of the key risks which the bank comes across in terms of its business. But important to highlight is that, alhamdulillah, we've got effective mechanism for identification, measurement, monitoring, and control of risk. We have got strict board oversight. We have got management committees. We have got different forums on which the risks are approved. Similarly, for market risk, there are different policies and procedures in place to make sure that our risk remains within the limits. We have got operational risk framework in the bank, and we've got a team who is continuously working on this. Liquidity risk, another important area. And environmental and climate risk is something which is also very close to us in terms of the operations of the bank. Thank you so much. That's it from my side.
This is one presentation which we gave for the performance Bank of Khyber 2025. We are here. We have all the business heads here. Whatever queries you have, whatever inquiry, I mean, whatever you want to ask, if there are any questions, please feel free to ask us. We are already, tomorrow we have a board meeting for the first quarter results as well. But बताइए, if you have any questions, we'll be more than happy to answer. I think we have a hand from Shumaila, which is
yes. Thank you for taking my question. I wanted to know about your targets and outlook for deposits. So in your presentation, you mentioned that the CAGR is 15% in the past. So do you think you can maintain this growth rate? And secondly, I wanted to know about your branch expansion plans. You mentioned on slide 6 that branch expansion is one of your focus areas. So can you give a range or a ballpark number of what you're planning?
Shumaila, let me answer this question. As far as the deposit growth is concerned, yes, of course, we expect to maintain same growth and CAGR and maybe even higher. Of course, we have our own strategy on this. And, depending on our expansion of आपको भी बताता हूं, of course, we would like to improve our deposit mix as well, which is obviously going to be a major factor towards profitability going forward. As far as the expansion for the branches is concerned, आपको मालूम है, and of course you can see that BOK's main footprint is the province of KP. And of course, being a KP provincial bank, although provincial bank हम अपने आप को कहते हैं, but of course, our expansion is going out of KP as well. So on an average, we are targeting 35 to 40 branches every year going forward. But the main emphasis जो हम करना चाह रहे हैं and which we are targeting is on digital. So we don't want कि हम 100 branches का एक expansion plan announce कर दें and we want to be a 2,000 branch bank. That's going to take time. We are a small bank. So we are concentrating on the expansion very strategically in KP, outside KP as well, 25 to 40 branches on a per annum basis. But on the other hand, we are targeting a lot of digitization. And digitization going forward will help us grow our asset book, our balance sheet size, our deposit book, because digital is the new buzzword going forward.
I understand. Thank you for answering my question. I have just one other question about your expense ratio. So for most other banks, the expense to income ratio has increased, but for your expense to income ratio has improved. So how did you manage to do that, and what's your outlook for this ratio?
ये तो अच्छी बात है कि we have been able to improve our expense ratio. Dekheng, we are very particular about our expenses. And if you look at the industry, yes, we are very conservative as far as this ratio is concerned. Going forward, of course, there are some regular expenses which we incur, and थोड़ा सा हम भी expect कर रहे हैं कि expenses will grow. Expenses will continue to grow, and I hope inflationary pressure उस तरह ना आए. But of course, with investments into digitization and other areas, I hope we are able to maintain such ratio. But थोड़ी बहुत flexibility, we are also expecting it might be higher, it might be lower. But we'll obviously try to maintain, where we are right now. And even if we are able to maintain this, I think that's going to be an achievement.
Thank you. That's all. Thank you.
Thank you, Shumail. I think we have a raise of hand from Mr. Umar.
Welcome, sir. Thank you for your presentation. Sir, I have a few questions. First of all, I would like to know the breakup of your investment book and what the yield is on your fixed portion of the investment book.
Okay. Irfan, would you like to answer also?
Basically, it's a mix of both. We have got floaters, we have got some fixed as well. In terms of the T-bills, if you look at our closing number of December, we have got about 75.6 billion in T-bills. So it's a mix of both. We have got most of the portfolio is the floater. So that's basically the composition if you talk about the overall investment portfolio.
Okay, thank you, sir. And I think इसी हवाले से मेरा follow-up question है. We're seeing that your yield on investments is fairly low compared to the rest of industry. In calendar year 25, it's clocked in about 8.5%. So is there a particular reason for this?
Basically, we have ensured that we remain, in terms of the risk, we remain within the limits, keeping in the risk appetite of our balance sheet and the bank. So whatever exposure and whatever position we take, we keep that thing in our mind, so that in case the interest rate movement, goes against the expectation, we still are able to manage that. So as you know, that if you remain within certain risk limits, your returns are also range bound. So that's the main reason.
Okay. Then, sir, moving to the advances side, I'm seeing that you have fairly high gross NPLs across the industry. However, we're also seeing that in recent years, you've increased your provision coverage. I think historically, you used to keep that at about 60%, whereas now we're seeing numbers between 80 to 90%. So, and your capital adequacy has also improved. So it does appear that your bank is preparing, well, the balance sheet has been strengthened quite a bit, and you are preparing for a new phase of business. So would you be able to, what's the preparation for? Are we going to go into a higher investment base, or are we going to try to give out more advances? Is that why we've created the buffer in the CAR ratio?
Umar, we are already, आपने अगर देखा भी होगा, even if you look at our financials 2025, there is a substantial growth in advances. And we continue to maintain that strategy. And it's not only going to be corporate banking, it's going to be SME and consumer as well. Because as far as our strategy on consumer and SME has been, it has been pretty low as far as the number is concerned. So we are looking at a substantial growth in all the three areas, And that is the way forward.
So can we expect any improvement in this gross NPL ratio?
जी, inshallah it will. आप देखें कि even for FY25, we have been very aggressive on a remedial strategy. And even for 2026, there's going to be a lot of emphasis on remedial management. And you will, inshallah, see improvements going forward on an every quarter basis.
Umar,
Yes,
एक इधर मैं add करना चाहूँगा. If you dissect this ratio, you will see that in terms of the gross NPLs, there is a reduction in 2025. So we started off.
Everybody say.
Yeah, we started off from 13.3 and we came down to 12.5. And even if you look at the gross historical numbers, I mean, from in 2022 and 23 there was an increase, and then in 23 and 24 almost the same number, and then a reduction. So this is the overall scenario in terms of the NPL movement.
Okay, thank you, sir. And sir, for your NPL coverage, you've been provisioning more in recent years. So what's the target specific NPL coverage ratio or total NPL coverage ratio?
Our existing
is 95. Overall, if you look at with stage 1 and stage 2, we are 95%.
We are already 95% covered. So we will obviously want to maintain the same range. I mean, we are being very conservative as far as that is concerned. And we would continue with this, and we are adhering to the ECL coverages and all the SPP regulations. So we are, even if you look at our book today, we are over 95% covered.
Sir, so what drove the change from a previous historical of about 60% to 95%? It does seem like this is a major change in your policy of provisioning, right?
Okay,
but it's better management, yeah, and it's just being prudent as well.
Yeah.
Because I think there's nothing wrong in that.
Yeah. I think
Of course, sir,
I got your question. I think you're comparing it with 2023 number. Yes, there was a change in the standards as well, and as you know that IFRS 9 was implemented across the industry, so we also did that, and that also helped us to create additional buffer in terms of ECL adjustments. So but the good thing is that the bank not only absorbed but also was able to improve its capital adequacy ratio. So overall, if you see, the balance sheet has strengthened, as you also rightly pointed out. So the major shift was through the ECL adjustments made in light of the IFRS 9, and apart from that, as Sir pointed out, that we are also being prudent in terms of the provisioning requirements. So it's a mix of both.
Okay, thank you, sir. And my last question is, would you be able to give us any clarity on what your payout policy is? Is there a specific policy you're trying to follow, or a uniformity of dividends moving forward?
Yeah, Dekhen, you have seen our dividend payout for year 2025, and we just hope that we continue to perform better and better, and similarly add on shareholder value in terms of dividend payout as well. So hopefully we should be able to give attractive returns.
Okay, thank you very much, sir.
I can't see any other hand, but if anybody else has any questions, we'd be more than happy to answer your queries. I don't think I don't see any other hand raising. So I guess that is where we are. Anyway, all of you, thank you very much. I hope we have been able to address your questions, and you've been able to learn more about our performance for 2025. So I think that is it. So thank you very much, all the analysts and all the people on the call, and we hope to see you in the next corporate briefing, inshallah.
Go buy the share.
Yeah. Thank you, Ji. Thank you, all of you.
Thank you, all of you. Thank you, everyone.